Fintech term really came in terms of addressing some of the gaps in the market. When you look at the customer end, there were so many gaps that needed to be filled because it was more manual. And how do you really reach the end consumer and fulfill their requirements better?
Also here we are coming back into focus, talking about where is Sri Lanka on the fintech curve. And fintech also does not mean, I want to reiterate, does not mean just payments and settlements. So if you put your one finger on one thing, I would say digital lending.
We look at fintech as simply a means. It's a means to provide a better financial experience for our customers, a better financial experience for our sellers, but also a more efficient and hopefully a more cost-free or a lower cost way of doing business with all of them, and at the end, being more profitable for us as a business as well. On the Rocketship Experience, we are discussing where is Sri Lanka on the fintech curve. And in the studio with me is Channa Silva, who is Chief Executive of LankaPay now. Nandi Anthony, who is the Managing Director of the Credit Information Bureau of Sri Lanka, and Rakhil, who is CEO of one of Sri Lanka's largest e-commerce company, Daraz. Channa, let's start with you, right? Let's try defining this term fintech, what it means to you and for the organization you're representing. How do you potentially connect to this fintech ecosystem that we're talking about?
Yeah, so I think the fintech term really came in terms of addressing some of the gaps in the market. And that's how it really came, because when you say financial services, it's banks and finance companies primarily. But when you look at the customer end, there were so many gaps that needed to be filled because it was more manual. And how do you really reach the end consumer and fulfill their requirements better than what they rather than just going to a bank branch and get accessing the services. So how do you access financial services and related services seamlessly and conveniently? So that's where the fintechs came in to fill those gaps. I think that's where the value addition that the fintechs brought. So make things more convenient so that the consumers start enjoying digitally enabled financial services.
So it is a combination of financial and technology, fintech. You just compress the two and come up with fintech. So
Absolutely.
it's more than about payments.
Absolutely. It is much more than payments.
Right. Nandi, do you see Crib as being part of the fintech ecosystem? If so, how and what's the future?
Absolutely, the answer is very much yes. I would like to sort of give a very basic definition of fintech first. So fintech is obviously use of technology to provide financial services. And fintech has like 4 broad areas. One is the digital lending side. The other one is payments and settlement side. The other one is blockchain, right? And the other one is the wealth management side, right? So those are the 4 key areas in fintech, right? So in this scenario, I think provision of financial services, and into that, how does Crib come in and help out? One of the main sort of elements that we have introduced, which will revolutionize the financial services industry in Sri Lanka, is the credit score, right? All the developed markets have it, and Sri Lanka finally has something called the Crib score, which has a very high Gini, very high predictability in our score. That actually talks of the high data quality we have within the Crib databases. So that's one area. That's going to revolutionize the way credit evaluation and risk evaluation is done in lending institutions. And that's going to fast forward the lending process, giving so much of benefits to the borrowers, the customers. And the borrowers also can use this as a tool to bargain for better terms from the lender.
Sure.
On the other side, we are also very happy to finally announce we are days from going live on a totally state-of-the-art credit bureau system, which is going to have faster processing speeds, higher capacities, newer products, which is going to benefit both the lending institutions and the borrowers of this country, bringing better financial stability to the economy. So I believe I will go into detail later on how we sort of merge into this whole fintech thing. So answer is yes, and those two key elements are.
So you defined fintech as potentially four things, right?
Yes.
One of which was lending, and I suppose Crib's greatest value addition for fintech comes in that area of lending.
Absolutely, yes. Yeah, because lending, you will have the traditional sources of banks, etc. Now telecommunication companies are coming into the into the fray. Good example is Dialog Axiata, who went and bought a finance company license. And, I personally expected them to flood the market with 5,000, 10,000 rupee small loans, because they have their own internal scores, constructed out of their own client data, which they had earlier on. So this can revolutionize the banking industry, not only here. We see that phenomenon coming up. So the traditional banks can have a huge threat, because these people have huge access. They don't have to maintain the telecommunication companies. Little children now have mobile phones, and you can give loans through that, right? So they have a huge reach. They don't have to maintain high overheads of bank, huge branch networks, etc. You don't have to do that. The other sphere is obviously the digital lending, which once again Crib can get involved in, and I can touch on that later.
Sure. Rakhil, we see Daraz often as a e-commerce app, e-commerce company, but you're owned by Alibaba as your ultimate parent, which is one of the world's top super apps, right? Where is Daraz pitching to, and how does fintech relate to that?
So I think for us, financial services is a big part of our plan for Daraz. We see, being in the e-commerce space, payments is obviously one of our biggest, let's say, financial services touch points in our sort of consumer experience. But being especially a marketplace where we have sellers on the platform, and their entire financial needs also sort of looking at their financial needs when sort of participating in our ecosystem. We want to sort of play in the financial services place to really provide solutions for all of them. Now, what we see really value in a company like ours is we have a lot of data. We know how sellers, what their performances are, how much they're selling, what their inventory needs are, the values, the volume, etc. And on the customer side, we also know what they want to buy, when they want to buy it, how often they buy it, and how much they pay. So we really sit at that juncture where we can really provide efficient services, efficient technology to really match the needs of both our sellers and our customers, to create an ecosystem that is more friction-free, seamless, easy access to credit, more risk-free credit on our side. And that is where we really see fintech coming into play to provide that. We look at fintech as simply a means. It's a means to provide a better financial experience for our customers, a better financial experience for our sellers, but also a more efficient and hopefully a more cost-free or a lower cost way of doing business with all of them, and at the end, being more profitable for us as a business as well. So fintech doesn't necessarily need to be a complex solution. It doesn't necessarily need to be revolutionary in its offering. It's simply if it provides a better alternative to the status quo and making our sellers' lives better, or consumers' lives better, or regulators' life easier. We think that fintech has a very strong part to play in our story as Daraz.
One of the first questions I had for you was, we see Daraz as an e-commerce app, e-commerce company, but extending your capabilities to fintech to date, obviously, and then fintech means that you're treading that super app path to something.
Yeah. I mean, that is I wouldn't say, I don't like the word super app, but I think for us, it's how do we leverage on our ecosystem to add more value to our customers, correct? That's, at the end of the day, that's what we want to do.
Sure.
Correct? I think it's our duty as well, as if we have the means and if we have the technology and the understanding on how to provide a better solution or a better experience for everyone, we really want to provide that, because that's also great business sense for us. And if that results in us trading in other categories outside e-commerce, we see value in going down that path.
So I'm going to ask all of you to kind of step back and look at the success of fintech, obviously in China, where Daraz's parent comes from, but also recent successes of fintech in India, in Southeast Asia, in many places in Southeast Asia. I think, Rakhil, you were working in fintech in Singapore. Singapore's fintech was behind the curve, but now it's caught on quite well with the rest of Southeast Asia. And I'll start with you, Channa, right? If you look at the landscape, Sri Lanka is nowhere near where Southeast Asia or China or India is on fintech. What are those big challenges that potentially we need to overcome?
Yeah, so I'll just give my experience. I was at the Singapore Fintech Festival last week, and listening to some other guys who are there. So what I actually see was the vision they have.
Right.
I mean, where they want to be, crystal clear.
Right.
And also, how are they going to get there is crystal clear, the plan, and the execution is precision, right? So it's not just, knowing where you want to go if you can't deliver the outcome. So that is where I think in terms of having a vision is good. But if you can deliver that, I think that is what really has happened.
Where does Singapore's vision come from, for instance?
Actually, the way even the central bank, which is the monetary authority, is structured, I found it's very unique. I mean, they have like a managing director running monetary authority, right? And these guys probably, those guys are like all, sort of, I would say, come from outside, running the show, and with a clear background as well as, sort of clear vision of where they want to take Singapore to next level. And I think that is one of the key areas, saying that, okay, I mean, there will be so many obstacles, there will be so many restrictions, resource crunches, but they know where they want to go, and they say we're going to get there somewhere, somehow.
So that alignment is potentially what
because then
makes
they would,
that.
if they have a goal and they have an execution, they have a plan, they would, mend their regulations, acts, whatever, to suit that. I mean, I'm not saying, bypassing and all that, but they see a future, they see a vision, where they want to go, and they actually, straight heading towards that. And if it means that, working with many other countries, collaboration, having networks, all that work is there, right? And there's a lot of support coming from the government side to push the country in that direction, right? And that is, we also saw that in India, right? I mean, Indian RBI and the government is behind banks, right? Asking them to do this, pushing them to do this, because they also see a benefit to the economy and the country by going digital, right? And we see that's a huge mover, especially at least if you look at these two countries.
Sure. So Channa is talking about vision and the end, potentially aligning all the critical stakeholders, from where you are, from your vantage point and also your view, what do you think, what are those big things we need to get right for fintech to take off?
Actually, we have to understand the fundamentals, because and you starting with the mindset of the people, because if you look at Sri Lanka, just 20%, maybe in 2019 it was like something like 19% were people living in urban areas. The rest of them were in rural areas. So these people, especially in the rural areas, they love to go to their bank branch to take out their pensions and settle their utilities and bank their cash and etc. So the fintechs will have a huge challenge in changing that mindset, and I believe that the offering needs to be a game changer. When the offering is a game changer, everything sort of changes. But and also sometimes they say need is the mother of invention, because if you look at the COVID pandemic, this actually forced a lot of digitalization, forced a lot of automation, because mobility was a problem. Access was everything. So, even banks, forget fintech, that comes later, if that's what I am saying, if the offering even to a people who are a bit on the back foot and mindset needs to be changed, the offering the fintech comes with, if it's a game changer, then the whole thing changes. So good example is a credit score once again. So one of the things that these people in rural areas, not only that, and like anybody who's finding it difficult to maintain a great credit record, right, has an issue. I don't want to show my credit record to anybody, because then it might actually prevent people from lending to me. So showing your record was a problem. But now the credit score does not have any record. The record or the credit records are fed to an algorithm and a score comes out. You have a high score, you get better terms, better interest rates, and better limits. And
This is just like it is in the US, a score of between,
I kind of tend to disagree with a bit on what Nandi is saying, because data doesn't show that. We have done a bit of market research. The past COVID has actually changed that demographics have changed, right? Because the mobile penetration across the country is nearly 150% of the population. I mean, at least the SIMs they showed, right? And out of that, we have nearly 9 million or 8.2 million, rather, smartphone users in the, at least who are using social media using mobile devices, right? And which is not really this older generation technically, and they are into digital services, right? And they are the influencers for this older generation, because actually with COVID, people had to get smartphones for the e-learning and all these things. So we are seeing that change has happened to a great extent. So I think if we are in that mindset where we are still there, so what we need to do is, rather than try to boil the ocean, we have an 8 million target market.
Sure.
Let's convert them first. Because the day you are trying to convert the guy with a feature phone is 10 years away. Because the security and all these technical issues that are with this thing, right? So the whole idea is, rather than trying to boil the ocean, let's go behind low-hanging fruit, which is what we feel. And if you give them options to do that. So, I mean, for example, that's what we are seeing is traditional banks and finance companies have been looking at it from a my bank, my customer concept. It has changed completely. Especially the younger generation, they don't care which bank. They want to fulfill their requirement. Which app, for example, right?
Sure.
And which app is not their bank's app, most likely. And if the app that can provide those services, what they want to enjoy, immaterial of the bank connected, whether it's payment or lending, right? Then they would go for that. So that is where actually what we have seen, there are gaps in that. So the gaps in that is where we have come in. We have filled those gaps. For example, a customer of belonging to one financial institution can use any app in the market. Then it gives them the choice of selecting what suits their requirement. Sure. So if you can do that, we will get more of these digital consumers, I would say, who are carrying smartphones or at least have access to digital.
We don't have a banker on the panel, but the future of fintech is where banks become sort of wholesale lenders, and consumers have a relationship with their fintech service provider, which can be an app, which can be Daraz. Is that the sort of future that we are looking at, Rakhil? What prevents us from reaching that future?
That's one version of the future, correct? Right. I mean, I don't necessarily agree with the premise of Sri Lanka is behind in terms of financial services or fintech or whatever it is, correct? I mean, if you look at our markets like Southeast Asia, only 20-30% of those countries are banked. We have nearly 100% bank rate in this country, correct? Nearly 80% of the population have debit cards. In Indonesia, it's, I think, 20%. Similar numbers in India. If you look at markets like the US, 90% of the banks are not connected to each other through automated clearinghouse. So one bank can't pay another bank without the money taking 3 days to get to the other bank. So I think in a lot of ways, Sri Lanka has set the base, a good foundation to offer the consumers a great experience. And in many ways, we're ahead of the markets in Southeast Asia. So it's really looking at what we shouldn't compare our fintech offering or what we have in terms of fintech innovation to Singapore. Okay, Singapore is a very different market where a lot of those companies service global enterprise solutions and things like that. So it creates a very different ecosystem. I think for us, it's how do we double down on what we've built already to build a better offering and provide a better service to the customers. Now, you're right. We do see, companies like Daraz or even Dialog, who are, let's say, a more innovative, agile, friendly face to the customer than most banks. So it does make sense that we take more lead on managing that relationship, and banks do what probably they do better, which is making sure your money is risk-free and making sure that whole ecosystem is secure. However, I also do think that many banks are doing a decent job of trying to play that game. And I honestly, I don't think any bank in the world has really done an amazing job of creating that custom experience. So it really comes back to, I don't think we're that behind. I mean, maybe we're not creating blockchain technologies for banks to, manage their sort of data and stuff the way markets in Singapore are. But I think we're not starting necessarily in the back foot here.
When I suggested maybe we are behind versus most in Southeast Asia or even India is because we don't have a culture of walking in somewhere and just using your phone.
But that doesn't really happen in most. India maybe that has happened because that was literally forced by the government. In Singapore, when we launched a payment company in Singapore 5 years ago, which is not a very long time ago. 5 years ago, 70% of any payment transaction in Singapore still had it happen in cash. Yeah. Even now, it's still more than 50%. QR payments are still very much the minority. And it's you also do see a lot of what you think is innovation based on PR and glitzy events and stuff like that. But the reality on the ground is not as game changing as you think compared to markets like ours. Is what I've seen at least.
Channa, let me bring you in. If there is, and then I'll come to all of you with this. If there is one thing you could fix that you think can make fintech flourish, it depends on who you're talking to. Rakhil suggests that, hey, we're not so badly off in the first place. But assume we want to be the best case here. And if there's one thing, what would that be for you?
Yeah, so coming back, I agree with Rakhil that we have built the infrastructure over a long period, and we have connected all the financial institutions together. So now you can do risk-free, hassle-free kind of transactions. But if you ask me one thing, I think we need to solve the consumer experience problem.
Correct.
Right.
If you solve the consumer experience problem, for example, we seem to be going and putting solutions through technology which are more difficult than manual. Like, for example, one particular instrument may not work in another. For example, you take one particular payment instrument may not work in all scenarios.
Yeah.
Right? So a lot of people have, okay, let's push this for everything. It doesn't work that way. So if you first take the consumer at the center, and if you solve the consumer experience problem, because for example, if you take just payments, a payment through digital has to be simpler than paying via cash. No? Otherwise, they won't switch.
Sure.
So you have to find a way, a consumer experience simpler than paying with cash. So unless somebody who's providing that solution addresses that consumer experience issue, we are never going to get them to switch.
Where is the kink in trying to do that, right?
Yeah,
you talked about a lack of vision.
Yeah.
Right, that potentially can align all the key stakeholders. Yeah. Is this a problem, the one you're now referring to, that it can be solved bottom up, or has it to have a top-down solution?
Yeah, so I think some of these even solution providers has got the context wrong. For example, Sri Lankan context, I agree with Rakhil, we are a well-banked country. We are not an underbanked country. We are not an unbanked country, but we are underbanked because people don't put money into the bank. That is our bigger problem, right? It's in cash boxes and walls and so on. So which is a bigger problem than so digital is going to solve that, because that cash is going to come into the banking system. So which is a fundamental issue. But say, for example, if we bring a solution without looking at our context, thinking that a solution that works in country A works here, it doesn't really work. I will take a simple example, mobile money. I think when the mobile money started, it was flourishing in Africa, M-Pesa. I mean, it was flourishing because of a very simple reason. Because there are no banks. There are no ATMs. If somebody wants to get cash, they have to go 500 miles and there are no buses. So even feature phone doing a transaction was very convenient for them because they had no choice. But when you come here, you go out of the house, there's an ATM, you can withdraw cash. So cash was not really a problem. That was not a deal breaker. So that's why you had to look at a different way of addressing, because actually using cash was not really a problem for people. Until COVID hit and they couldn't go to an ATM and they couldn't pay the vendors who were coming to the house, then it became a problem. But until then, so once you overcome because behavioral change is not that easy, right? And when they found conveniences in using digital, they stuck to it, right? But getting there was the bigger problem. So the whole idea is whoever is providing these solutions must address consumer experience gaps. If you do that consistently, people will come. What we have really seen is some of these guys don't see that bigger picture, right? They say, okay, this is great technology that works in many countries and let's put it here. Correct. It doesn't work, and they figure out why it didn't work because they didn't look at the context, right? So when you don't look at the context and find solutions, it just so I think that is where fundamentally where we have gone wrong. If you are putting something first, actually I will say a classic fintech theory is you find a problem. So normal theory is you find a problem, you find a solution. But in fintech theory, you find a problem, unbundle the problem, find solutions
for each part,
right, and then rebundle it as a single solution. Then it comes as a complex solution, but you solve the problem in parts. Right. So that's how fintechs really solve complex problem, not really going.
Is that a fair description of what you're trying to do at Daraz, Rakhil? I mean, you got your e-commerce app, you've introduced kind of lending, payday loans. I don't know whether you want to call it payday loans, but is that an approach that you're taking?
Yeah, I think companies like us sometimes, or any startup in this space, sometimes look at the problem in a more simplistic manner than let's say what the sort of bigger infrastructure issues that sort of create friction points to provide the solution, correct? And that's where sort of a lot of the frustration lies for us. Yeah, I mean, for us, what we see as a simple thing that Crib can do in terms of digitizing credit scores, or what we can do that the banks can come together and create a digital KYC, for us is a very simple thing that we think should be implemented. But there are many stakeholders and complexities involved in making those things a reality. And I think that is where we probably need more guidance and push from the central government as well. And then sometimes you do need to have a heavy hand in making some of these things a reality faster than maybe what sort of the traditional timeline would take. But yeah, I think for us, we do look at sort of simplifying the problem and really focusing on areas that we can add value on and then really provide that. But at the end of the day, we need the ecosystem also sort of to participate to make the overall consumer experience better.
How much of a contribution to the problem is the ability to fund, right? Banks, ultimately it will be the banks that fund most loans that will be done through fintech. I don't foresee you starting a bank or risking shareholder capital to fund loans, right? It doesn't make sense. How do you link that, Nandi, from where the funds are to where the potentially lending is going to happen? And if you look at that link, what can Crib do, and potentially what are the challenges, one or two challenges to overcome to solve that?
Yes. So actually, you asked what for what is the one thing you would do, to get fintech moving in Sri Lanka. Channa obviously sort of didn't agree with me when I said that there are some old habits that will die hard, and those are part of the challenges. Whilst I agree, in fact, probably Channa, Rakhil and myself are saying the same thing in a different way, because I do agree in what they say, that yes, lots of work has been done, but there are still those challenges need to be addressed. And also here we are coming back into focus, talking about where is Sri Lanka on the fintech curve. If you talk about China, That's a whole different ball game, really. So, and fintech also does not mean, I want to reiterate, does not mean just payments and settlements, right? Fintech, you bring out a good point. Where are the borrowers? Where is the money? And how is this going to be linked in through fintech? So, if you put one finger on one thing, I would say digital lending. Digital lending is one big component of fintech, right? If you talk about innovations that came out in 2017, Helios P2P, peer-to-peer lending, right? So matches, it's a portal that matches. This came out actually from an incubator. It was a startup, and it got its second round of funding in 2019, as far as I know. So it's going to come out in a bigger way. They do their own scores. Say you're a investor and you don't mind investing in people who have low scores, but you will charge high interest. He's a sort of a more risk-averse investor. So, but he will want to invest in people who have good scores, but he doesn't mind taking a smaller interest. Same with the people. So they will have good scores, bad scores. So the portal has borrowers on this side, lenders on the other side. But it's a very safe form of lending because it's an informed lending, right? But if you take something like Cash Wagon, that came out. So, people, because they don't have the profiles of people properly to look at them and then lend.
They don't,
right?
have,
They don't have crib connectivity, right? So they can justify, okay, I'm going to charge him 80% interest because I don't know him, right? So, so then you are going to have indebtedness because they can't pay back. These are the other sort of, bad parts of, but digital lending is the key. Right. So if you look at other things like Crowd Island, which is matching angel investors with entrepreneurs, right? That's part of Sri Lanka's fintech development. I mean, if you take Easy Cash, right, Free Me, these are fintech developments. But what I would feel is that we need to look at digital lending in a big way, and that's where the future is. And connecting crib, giving them scores so that their internal scores can be merged with the crib scores, etc. Because then there is informed lending, and then the borrowers don't suffer with high interest rates, and also the financial stability is maintained.
We talk about digital KYC also, because particularly if you're lending, you need to have fair amount of accountability. You need to have visibility about what's happening. Digital KYC or know your customer. Know your customer applies to anybody who's lending other people's money, I suppose. Is this something that's sort of preventing the development of the ecosystem? The lack of digital KYC in Sri Lanka. I suppose banks now do digital KYC. They will onboard a customer they haven't physically met at a branch. But can this be done on an app? Or by somebody else?
Yeah, I think the bigger problem is not at the bank level. I mean, you can do digital KYC, but for example, once you do a digital KYC in one bank, do you have to do digital KYC or any KYC in another bank? That is where the problem is. Now, you shouldn't. So that's where the problem is. There's no shared KYC, right?
Sure.
That's where the problem. So
is that a thing? Is a shared KYC a thing?
Absolutely, because if you get onboarded onto one bank, there should not be any KYC done in any other bank, but that should be in a central where that's where blockchain and other things can come in, right? So it should be shared KYC. So because a customer cannot get on, you have to physically, because of certain risk reasons, you may have to physically onboard the customer at one place, right? Even
now,
digital ID. Yeah.
Essentially, every adult in this country, it has a digital identity, whether it's with a bank or a telco. So, principally, nobody should ever need to show their ID ever again. Sure. But that's the fundamental problem, correct? We have the infrastructure, we have the technology, we have the information, but we are unable to bring those all together. Now, some of that, I'm hearing right now that the banks are looking at sharing digital KYCs, but they're not willing to open it up to third-party startups like us who have a lot of value in that, simply because of whether it's regulatory reason or interbank agreements, I'm not sure. But those are the barriers that we need to sort of look past, correct? and see how can we create an environment of collaboration, openness, and that also will essentially really drive the ecosystem much faster.
If I can comment on that, on what Rakhil said, about trusting third-party fintech providers, right? So that's where sort of this concept of open banking comes into play, right? And that's a huge concept that's playing out in the fintech world today. And I believe Sri Lanka is also trying to sort of step into that. As we speak, if central bank has its own committee on fintech, which has already gone sort of and looked into areas like blockchain, distributed ledger. We talked about shared KYC. So shared means you have to have trust, right? And trust comes from couple of key things. One is legislation, like if one is the law, right? Now, the advent of data protection laws. Earlier, we had only maybe the Crib Act and things like that to protect data of people. But now, recently, we had data protection laws coming. So that trust will be built more, Rakhil, I believe. Yeah. And also, if you take sort of the open banking concept, you have the banks, and then you have the data providers in the middle. The data providers can be anybody from credit bureaus, fintech companies, and there can be even central banks. But the banks will only share with the trusted parties, so that all the consumers through APIs, that they can make it available to any consumer. That's sharing, like what Channa said. If you share KYC, you have to share KYC. So in the open banking concept now, trust is a matter. So already banks trust credit bureaus. So the credit bureau can play that role better. Now credit bureaus in the world, there is a phenomenon. They have gone and bought fintech companies who have the fintech capability to play that middle role of being the data provider. So, these are things that have to evolve quietly. I believe like Channa would probably know, as like sort of central bank is also sort of, kept the first steps in this scenario, and we have a base. So we have to build on that.
So I just want to make one point quickly. I think for us, if you look at it from a startup from our point of view, okay, we see this as more the ecosystem. Seems to be more catered towards protecting institutions than consumers. For example, for me, it makes no logical sense that a person can go and get their Crib score from Crib, but he can't tell me to get his Crib score. I mean, basic logic doesn't make sense there, correct? So why is there a system in place that I can't collect his Crib score?
I can't authorize you
to collect it, correct?
My script.
What is preventing? Is it the law, or is it for me, why is that rule even there? So that is why we need to start unbundling a lot of these sort of historic institutional protective policies that also throttle the progression of the ecosystem.
So for me, I think I kind of agree with what Rakhil is saying. Two things. One is, if we had a system for digital identity on a single, like for example, Aadhaar in India, lack of other examples, right? So that authentication piece we are really missing, because you are authenticated by your bank, for example, right? Not by any other bank. So that is sort of a fundamental block. If you have a central repository where you get authenticated, whether it's a telco or a bank or whatever, you're authenticated, right? And if it's there, then it's going to be much simpler to integrate to what Rakhil is saying, right? Access to data from anywhere, right? Because you're authenticated. So there is one single piece missing. So there was a project for the last 10 years, and which is, I don't know where it's going. The second part is actually, Nandi touched on open banking. We're already doing open banking. For example, if you take what we have launched as Just Pay, you go to another bank app and add your third-party bank account, which is open banking.
Yeah.
Right? We already have that. I mean, we already have some of the infrastructure to do that. And central bank has a committee to do that, and also shared KYC. Actually, we are in the process of actually implementing a solution for shared KYC. I mean, there is a sort of a committee, and we have been asked, LankaPay has been asked to set up by central bank a shared KYC platform. So, I mean, it's going to happen, but it might take some time integration, but it is happening.
But open only to banks.
Well, I mean, so it's like this. Now we will start with that, because that's where the data is. But I think that is where like the GDPR type of regulation. So there are some of the fundamental blocks may be missing. For example, we have Data Protection Act, but we have still not established a data protection authority.
Authority,
Right?
exactly.
So once that comes, so there is some missing blocks in order to do where we need to
So
go.
just to sort of make sure I understand you right, Channa, I mean, two approaches to knowing who you're dealing with. It is a digital identity, a national digital identity, like India has implemented.
Right.
The second option is for somebody to start this from scratch, right? So if you start this from scratch, will you just take existing data and start a market, start sharing it, or you will start building this data from scratch?
I mean, it is sharing of existing data with others, right? So banks already have databases, right? So and telcos, at least initially it may be banks and finance companies who are regulated, because this initiative comes from central bank and the telcos are not really regulated
What's the legislative or legal backing you have to do this?
Because actually, for example, if you took the financial sector, central bank as the regulator has the legal requirements or legal, I mean, they are the regulator who can even change X and whatnot in terms of financial sector. So they can actually, and they will. And I think the direction is there. So how much we can do, because obviously there are lots of gaps you need to fill. As I said, okay, we took a long time and established Data Protection Act, but no authority, right? So then how do you execute the act? So these are gaps, because without doing that, nobody's going to enable somebody or other to share, because what are you going to do with the data, and what are the recourses the consumer has, somebody misuse. So these are some of the, those have to be fixed fast.
So banking will become more efficient. So if you have potentially a shared database, right, and you approach a bank that doesn't have your data, it's a simple matter for them, right? But I suppose for this to really be useful for consumers at large, to improve the consumer experience across fintech, not just in lending, the data will have to be fairly universally available.
I think the premise that we have gone with, customer has a contract with the bank, agreement with the bank.
Sure.
But that may not necessarily be the case with the fintech right now. I think that is where the disconnect is, right? So you go to your bank, when you open a bank account, you sign a 10-page document, which probably you don't even read, which has all these conditions of risk averseness, compliance, all these things built in, right? And they have recourse if something goes wrong to refer to the agreement and say, hey, you agree to this, right? You may not have seen it, but you agree to this, right? You put your signature. So that is because that is where the compliance and risk side is really playing that role from the bank side.
Sure.
But the good fact is, if fintechs can partner with one, that's where we are looking at collaboration. I mean, some pieces might take 5 years to fill. Like, for example, setting up the data protection authority, I don't know how long it's going to take. But if you can partner and collaborate, that's why I've always been telling the bank, don't be a fintech. Provide your core services efficiently and partner with fintech, so that they provide the technology solution.
They're only afraid because they think the customer relationship will be built with the fintech, the data will reside in the fintech.
I think it's changing. I think it's changing. I think because we're seeing more and more banks now partnering with fintechs, because they know that they can't compete at the grassroots level. They can't. I mean, for example, if you take a finance company, microfinance, they are at the grassroots level. A telco is at the grassroots level. They can never compete unless they partner with, for lack of example, I mean, say Daraz, for example. I mean, they are at the grassroots consumer level, right? And if they partner, you can create a powerful, because the problem is, banks have the lending power. Now, for example, if a consumer, a merchant, right, wants some credit, if they partner with a bank, they can provide that credit. So that's a very powerful partnership rather than trying to go it alone, right? That's I think the example what Nandi took, Dialog, buying Dialog, Colombo Finance to be Dialog Finance, probably in that direction, right? May not necessarily be lending to every Tom, Dick and Harry, but for their merchant base, whatever that they are looking at, they can create this more tractionable, solution with more traction.
So let's do some closing thoughts. I'll start with you. You can share your thoughts and then close quickly.
Yeah. Because I'd like to address the question that Rakhil actually posed, which I think is a very sort of important question, which will be on lots of people's minds. Like we talked around that. Even Channa brought up some important points around that. Why that is so? I think Rakhil's question is like, why can't I get your score, right? So that always breaks down finally to trust, right? Even a bank can't take your score without having a lending intention. So there are 6 permissible reasons why any lending institution whom you are having a relationship with already can even take your crib report out or your crib score out. Otherwise, they can't take it out. So, and these banks are once again regulated by the central bank. So there's a lot of trust involved that your data is not going to be, I mean, if you take Equifax, the world's third largest credit bureau, was hacked and 143 million people's data was compromised, right? And some people's data was with other governments. It can go to that level. So people don't want that to happen. And even regulators, they are very concerned about that, and they give a lot of care for data security. So like I said, like what Channa said as well, this has to happen slowly, and it is happening. So part of it is the legislature, part of it is the law, right? Earlier, like I said, Crib Act was there, that was the only thing. Now we have got the data protection laws. Now we have to have a data protection authority, and with that, people like y'all, the fintechs, will be given more responsibility through that law. And then people will have more confidence in you to play that role, right? So why it's still not there is why in open banking, credit bureaus are buying over fintechs, because credit bureaus are more trusted. Central banks are more trusted. So this is the point I made. Yeah.
Right. Rakhil, final thoughts.
We are relatively, for a small nation, for a relatively small population, we're probably, in my point of view, over-regulated, and although many policies have been created with the consumer in mind, it actually creates more friction for the consumer than solutions. So I think, we are never going to be able to have that leap forward that we would all love to see. And I think, if you talk to everybody on an individual basis, everybody wants it, correct? But the problem is when you take the collective mind, you come to this sort of protectionism and overcautious attitude that I think sometimes, really, not sometimes, in most cases, it prevents that sort of leapfrog in experience and technology that we would all love to see. Now, where do we as a country find that balance? Okay, now it's countries like Singapore and stuff, they create sandboxes, they create sort of test environments that allow to create test cases and see those kind of outcomes and scale up from there. We tried that in Sri Lanka. It didn't really materialize that much with the central bank and stuff like that. So I think first, I'm talking from the point of view of the fintech startup, correct? For us to really participate in the ecosystem and really to contribute to change, we need those kind of scenarios and ecosystems to exist for us to really show how we can contribute. If you go down the route of saying, in your example of Equifax and data protection, and you use those kind of examples and then throw the heavy hand to prevent those kind of situations, I think we lose a lot of opportunity in between to find our legs and our Sri Lanka's story in the fintech, overall story.
Yeah, so I think for success, to achieve success in where we are going, right? We have to also, 2 areas. One is we have to look at it from a consumer experience perspective end to end. A lot of people are not, they are like piecemeal, right? I mean, I'll take a payment example, right? For example, we want to go and make a payment to a 3-wheeler guy using in ride share. But the 3-wheeler guy, at the end of the day, has to go and buy vegetables using cash. So he has to take cash out. So he just rejects cards, right? Because he needs cash.
Yeah.
So unless we solve that last mile problem, where we also get them into digital, and a 3-wheeler guy can go and make a payment using digital, the cycle breaks down. That's where a bigger problem is. So we need to think end to end and solve it. So end to end also, not only payment. For example, we automate customs, Sri Lanka customs, for example. Payment is automated, submission of documents is automated. But for a trader, it's not only customs. They have to go to BOI, they have to go to Inland Revenue. All those are manual, right? Yeah. So you go here, digitized, you can get it in 10 minutes, but you take 1 week per department now. Unless you digitize that, trader is not going to, even the banks, for example, some of the LC documents, they have to submit physically. And where the customs probably access digitally signed. So that is a bigger block we have to solve, where end to end. Because if you don't do end to end, consumer experience is not going to be that great. And also, it's not going to be efficient by just piecemeal automation. So I think if we think end to end as a solution and look at the entire ecosystem, probably we'll get. I mean, it's much more complex than what I'm talking about. But as I said, unbundle the problem, fix all these, and put them together. It'll work. If you just only solve isolated problems, we will be there for another 10 years at the same time.
And when you unbundle and try to fix them, it's not one player who can fix
Absolutely.
each stage.
Absolutely.
The whole ecosystem will have to get
Absolutely.
together to fix it
Absolutely.
for it to come together brilliantly. Gentlemen, fantastic conversation. Thank you, Channa. Thank you, Rakhil. Thanks, Nandi. Great to have had you.